Hey traders, I hope you're all well. Today is Saturday, the 9th of May 2026, and it is 8:26 p.m. in UK. We're looking at US oil on the 4-hour time frame. My name is Harry, and welcome to my channel. Okay, so if you have seen my previous US oil videos, I've always said that we need to see 68 before any rally to the upside for uh 100, sorry, 120 and 130, and those kind of high numbers. But due to the price action that occurred yesterday, um my bearish sentiment has shifted to bullish now, and I will explain the reason why that has changed to bullish sentiment from bearish. So let's first of all look at this corrective pattern here. So this basically changed the whole thing. So we had this um, correction after this bullish movement, yeah, which we labeled as three. So this analysis is based on the Elliott wave principle. So after this push up for three, we need to see a four. All right, and usually on the leg four of Elliott wave principle, we do most of the times find a double corrective patterns. Yeah, so double corrective pattern simply means we get like a double zigzag, or a double flat, or a flat and a zigzag, or a flat and something else within the corrective leg. So I was kind of banking on that after this first corrective pattern, that we may have another corrective leg down. Okay, if you recall, I took a sell trade here, and we got out here. Then I said, take all your profit and wait for bullish price action before anything else, because I was hoping for maybe one more leg up and then a push down for the final corrective leg, which did not um, which did not happen due to the price action that sorry, which did not happen because uh, of the completion of this correction. So this correction ended here. So I don't think we should be expecting any more push to the downside. And I'll give you my reason why um, you know uh, why we may be pushing up from Monday. All right. So let's look at this correction here. Let's concentrate here. Okay. So after this leg up for three, yeah, like I said, I'm using the Elliott wave count. Yeah, Elliott wave principle. So after this leg for three, uh, we had this correction for A, B, and C. So this is basically a regular flat. Yeah. I did upload a video this morning where as I titled the video, I titled Mastering Elliott Wave 2 correction, something like that. Yeah, mastering second leg of Elliott wave corrections. So in that video, I spoke about zigzag and flats. Yeah. So for flats, we have three types of flats: regular, expanded, and running flats. All right. So this here is basically a regular flat where you had your three and your five legs down. Yeah. So the rules for regular flat is that your B should not go above the origin of A, which is this high, and your C should close below the A. Yeah, which we got here. So this is a regular flat. All right. So like I said, because this is the correction for 4, I was hoping for another corrective leg to the downside. So when I saw this, I thought this was a 535 zigzag correction for maybe a flat down or even a zigzag down. All right, but obviously we did not see that. We saw something else. Okay, so this right here is basically a 1 2 3 4, 1 2 3 4 and 5 leg up. So this basically is an impulsive leg up, not a corrective leg, but a motive leg up, impulse for 1. Okay, so what we'll do is we'll drop down to a lower time frame, like 15 minutes time frame. For actually, let's go down to 5 minutes. 5 minutes is where you see uh excuse me, sorry about that. So 5 minutes is where you see a better picture of what made me change my mind. Yeah. So LO12, one thing about LO12 is fractal. So whatever is happening in the bigger time frame, you first spot it on the lower time frame. All right. So um, this was where the C completed on the bigger time frame. All right. So then if you saw the video I uploaded on Friday, where I mentioned, where I told you, or what I discussed in the video, I said to look for a price action to go long. Yeah. This was because of what I saw here. And before the video on Friday, last week Sunday, after we took up huge profits, I'll show you. So on Monday, uh, we took a long trade, a short trade, um, from this high here um, to from this high here. From I think we took it from there, somewhere from there to this low here. Yeah, which I uploaded on YouTube, so you can find that on one of the videos below. And then on Friday, I did mention to look for longs somewhere around here, and I told you what to look out for before going long. And then later that Friday, I uploaded a video where I spoke about going longs. Yeah. So, like I said, I've been analyzing this chart for so many months. Right. So let's return back to 5 minutes time frame. So on Friday, I spotted this price action here that made me change from bearish sentiment to bullish sentiment. So we had this 1 2 3 4 5. Yeah. So if you are you can only get a motive waves, like a 5 leg push up and impulse, when you are um, moving up. So this is a signal that the price is going to go up. All right. So this 5 leg up here is basically a 1, and we have our rules for the 5 legs up. Yeah. So the rule is that a 2 must not go below 1. Yeah. And the 4 must not trade where 1 finished, and the 3 must be the longest wave, and then a 5 must close above the 3. So all the rules were met. Yeah. And this becomes our 1. And then we then had the corrective leg for 2, and as you can see, the 2 did not trade anywhere below the origin of this leg up. Yeah, the 2 is not the cleanest corrective pattern, but obviously I can make out what this is, based on my experience, which I'm not going to talk about that because then this video will be too long. So after we had a 2, we then also had a 5 leg up here, which shows a bullish price action, a bullish movement. If you look at this 5 here, you see we have the same rules. Our 1 here, our 2 did not go below our 1. Our 3 was the longest leg up of the 5. Our 4, our corrective leg 4, 3, 3, 5 did not come anywhere near our 1, and then we had a push up for 5. Yeah, so this becomes our sub leg 1 of 2. Okay, and then on Friday before the market closed, um, it appeared that we've now have a two a leg two of two. Yeah, because this here is a corrective leg. Again, we won't go into what this is, what this leg is, to avoid the video being too long. Yeah. So the reason why I feel this is a two is because this push down here did not close below the two. All right. So again, this is basically a five leg up, and then this is a second leg down. So on Monday, what I do expect is a rally to the upside that would break this high here. Okay, so what I'll do is I'll come back on Monday once we've seen a bullish price action to the upside. I'll come back on Monday to talk about take profits and what to expect. Yeah, but we are if this is a bullish price, if this is to go up, then we should be heading to 130 131 price area. Okay, so I'll come back on Monday to talk to you. Right, cheers.